guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. We have a very special episode. We're going to be talking about Atlis Motor. The stock has had a crazy couple of days, rallying over 200% in a single day, which is a crazy thing to happen. So we're going to be talking about what's going on with this company, answering that question of should you buy it. So I hope you guys all enjoy it. If you have any questions, let me know down in the comments. And don't forget to check out my blog where we talk about everything money, stocks, money management, side hustles, everything. So check it out, link down in the description. So now let's jump into it, let's go. Now for those of you that don't know what Atlis Motors is, and I didn't know what they were like a couple days ago. Atlis Motors is an electric car manufacturer and they're a battery development company. And over the past couple of days, they've seen extreme volatility, going up over 200% and then down today about 30% for the stock price. Now, why did this happen? Now, the company came out and they made a battery with over 2 gigawatt hours for their customers, which is a crazy thing, and this is a huge step for the company. Now, I know a lot of you might be saying, well, Carter, what does that even mean? One, faster charging. Atlis Motors, their overall game plan is to create a battery for one of their trucks, because that's what they're planning on selling, but they want to create a battery that charges in 15 minutes or less and has a range of up to 500 miles. Which, let me tell you, one of the biggest issues with electric cars is how slow those batteries take to charge. You're looking at anywhere from about 30 to 45 minutes to get a full charge on like a Tesla. Now, this is the biggest drawback with electric cars, is if you're going on a road trip. Everybody likes to say the old road trip excuse, right? Oh, I don't own an electric car because what about a road trip? You know, I have to find different routes, and then plus it takes time to charge compared to, you know, a gas engine where it takes not even 5 minutes to get a full tank of gas. They can cut down on the time of their charging a battery. This is a major step for the company and the industry as a whole. And they plan on selling these battery packs to other companies, whether it's other automobile companies or it's other different type of commercial, companies that need batteries. Now, yes, there is a lot of issues as a whole with Atlis Motors. The company is not profitable and, burns through quite a bit of cash. But you have to realize a company like this is a growth stock, right? They're funded by investors as of right now in hopes to create a product that sells, and then they can become profitable. So I think that, though, this is a huge step for the company and the industry as a whole. So if they can create a battery that charges fast, I'm telling you, the tides are changing, and this is going to be a huge thing for the electric auto space. Now, answering that question of should you buy it, for me, Atlis Motors does carry some potential, but overall it does carry some risk. The biggest issue right now with this company is the volatility of how quick this thing goes up and sells off. That's a high risk, high reward play. For me, though, I think it's worth having a couple of shares of it. I'm keeping it under 1% of my portfolio. What that means is for every $100 I have invested into other stocks, assets, bonds, ETFs, I'll put about $1 into this. Now, I know you might be saying, well, Carter, it's only $1. It's only $1. You can't make any money off that. Well, let me explain. If this thing tanks down, because it easily may, because the company's not profitable, I'm only out 1%. But if this thing starts skyrocketing up, I can always, one, buy more shares. Two, I have shares to make some money. It's a great way to keep, your risk level down, but still have, little market in the game to make some money. And, looking at it, everybody says, oh, well, even if you buy in, you're missing opportunity. I'm fully well aware of that. And I just think that that's the better option, because if I'm looking at this thing starting to outperform the S&P, I can add more. It takes companies decades to create, companies, right? It takes decades. Look at Apple, Google, Amazon, all those companies. They weren't built overnight. Rome wasn't built overnight. But I'm fully aware that I may miss out on some opportunities, some gains with the stock, having that type of strategy, but I just think it's the best strategy that works well for me, guys. So we'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care.